So we're now looking at the next statement, which is our profit and loss. It's also referred to as an income statement. So I think one of the biggest challenges of accountancy is you're having to learn a new language. It is a little bit crazy because it is just specific to our industry, really. And this is a pro forma. So every single business will follow the same structure, every single business. Now, the key thing here is when we're looking at a profit and loss, we are looking at a period of time. It's really important. Whereas with the statement of financial position, what we're looking at there is we are looking at a date, just one day. We just look at one day and say, what do we own and what do we owe? That's it. So here we're looking at a time frame. Now, it can be any time frame. This example is 2 months. Normally, it's 12 months. But some of you guys might have to look at the performance on a weekly basis, a monthly basis, 6 monthly basis, 12 months, etc. So the key thing is, it's not just about one day, it's a period of time. And this is broken down into categories. You've got the first part of the profit and loss, which is referred to as a trading account. So this is referred to as a trading account. Because this is looking at the core activity of the business. What do they trade in? So like HTFT, we trade in training accountants. That's all we do. We don't do anything else. We train accountants. That is our speciality. We're proper geeks. Whereas Severn Trent, you trade in water supply and I found out electricity as well, which I wasn't aware of, but you do electricity when I came out. Practices. So for those guys who work in practice, your trade is providing accounting services. So whether that's bookkeeping, audit, accounts prep, could be anything really. And then the rest of the guys, you are NHS or Ofqual. Oh, Leah, what do Ofqual do? They're like a governing body, aren't they? They like check on people. You can make a complaint to them. Is that right? It's okay if you're not sure, so don't worry. Wouldn't expect you to know. They check on the exam board. Yeah, that's it, exactly. So they're a little bit like compliance, aren't they? Making sure that everybody's doing what they're supposed to do. Yeah, brilliant, of course. So every single business's trading activity is different, okay? But you'd always start off with your sales. Now, there's loads of different words for sales. Can anyone give me some examples of different words you might use for sales that you might have heard in previous studies or experience? Don't know if you don't know. What's another word for sales? Cadbury's sell chocolate. Yeah, revenue. Good. Revenue. So, you know, in business, people might talk about, this is my revenue. Brilliant. Excellent, Mohammed. Anything else? Yeah, income. Brilliant. Well done, guys. You've also got turnover. Do any of you watch Dragon's Den? So whenever I watch Dragon's Den, for those who don't watch it, it's where you go and pitch your business. You want some money. You run your own business and you want some money to grow your business. And also with Dragon's Den, I think it's on BBC 2, isn't it? They'll also give you support and mentor you through your business. But I love watching Dragons Den because the dragons, the investors, they'll sit there and they'll say to these business owners, what's your turnover? What's your revenue? What's your sales? So, what are you doing? What are you selling? And some of them don't know the answer. That's pretty dangerous, isn't it? Or am I being high maintenance? I don't know. Am I being high maintenance? I think you should know what your sales are and you should know what your turnover is. So this is why it's so important, because this information enables you to make decisions. That's why these investors ask those questions, because they're only going to invest if they know what they're looking at. That's the reality. So yeah, that's the terminology. But the sales is going to be different for every single business. You've then got something called less cost of goods sold. So this is referred to as, this is a heading. I just want to say that right now. That's a heading. And it's referred to as your cost of sales. These are direct costs incurred selling the product and I'd say making the product. So let's take Cadbury's chocolates. What are going to be the direct costs for Cadbury's? You tell me. What do you think they're going to have to buy in to make their products? Yeah, ingredients, your cocoa, your milk, your sugar. Yeah, so they've got their ingredients. Is that going to be made by fairies? Yeah, we've got staff, absolutely. Do you know what? I just had an image of fairies making chocolate then. Yeah, you've got your factory workers who will be making the chocolate along with the equipment. Brilliant. So you've got cost of the equipment. You've got overheads. For that equipment to work, what do you need? For your laptop to work, what do you need? Yeah, maintenance, make sure you're complying. Electricity, absolutely. So, those are overheads. Rent, you might not own the property, so there could be rental expenses. And, you need your factory to make that chocolate. Brilliant. That's like Cadbury's. But if you take Severn Trent, for example, Severn Trent, what are the costs going to be? Now, for those guys who don't know who Severn Trent are, they are a water company. So they provide water for regions. So in the Midlands, it's Severn Trent who provide the water. So yeah, you've got machinery. This is the machinery at the, you're going to have to help me out here, Clarissa and Jess, at the, oh my days, where do you hold water? What's that word? Yeah, sourcing the water. Reservoirs. That's it, reservoirs. I just couldn't think of the word then. So, they're going to have to do maintenance in the reservoirs. There's a lot of testing, isn't there, in regards to the clarity of the water before it goes out to public domain. It's got to be tested, cleaned, filtered. All of that is going to be the cost of goods sold. Every business is going to be different. In regards to the NHS, it's going to be your swabs, your headache tablets, your painkillers, doctors, nurses. These are core costs, aren't they, to enable the NHS to do the activity that they want. HTFT. So for us, our cost of sales are tutors, books, material, software, this technology. We have loads of licenses, it's crazy. So that's our cost of sales. And that is broken down into opening inventory. So this is goods not yet sold at the beginning of the year. So these are goods not sold at the end of last year. Because if you think about it, our year end or period end is the 31st of December 2004. Do you know what, Leah? I'm going to do a pet shop. I think that's such a great example. Leah, did you do an inventory count at the pet shop? I would have thought you had counted, yeah? So you did this. You counted like, I bet that was quite hard counting fish and some of the animals. I mean, the bigger animals. Did you have cats and dogs and stuff? I've never been to a pet shop, I've got to be honest. So I don't know. I know they're massive. I know you can buy live animals at pet shops. Snakes, rabbits, hamsters. Wow. So you've got to count them. So you count them, and let's say you've got 20 rabbits, 20 hamsters. That is as at the 31st of December. I really do hope that on the 1st of January, we're going to have those rabbits and hamsters still there. I know sometimes, you know, animals can die. This may not have been a good example, to be fair, but I've committed, so I'm going forward. We're going to assume they're living and it's all happy days. So that's the closing inventory. They are now opening inventory for the next year. Does that make sense? Because they've not disappeared. They've not been sold on the 31st of December. They're there on the first day of the next period. Is that okay? Lovely, Leah. Leah, sorry to ask all these questions, but how much would you buy a rabbit and hamster for? Lovely, Nikki. Guys, are we all right? Please talk to me. So 20 times 30, what's that? 600 quid. And what's 20 times 849? About 170. Oh, yeah, okay. So let's go with 170. So 16980. I'm happy to work in whole numbers there because we're just illustrating, aren't we? So that is 770. So brilliant. At the beginning of the year, we have got inventory. This is good. So we did not sell last year of £770. And what we're hoping to do is we're hoping to sell them. So they're going to be in this sales figure this year. That's what we're hoping to do. We're hoping to sell them. So the good thing is we're matching that cost against the revenue. Does that make sense? Now, you are going to purchase more pets. Was there a routine, Leo, in buying pets? Or did you just buy the hamsters and rabbits on a need basis? Or did they have babies? So you purchase fish every week, right? So you're having your purchases going on in the year and other animals whenever. Okay, then. So you've then got purchases in the year. Brilliant. So that will have a cost. You then, at the end of the year, have to do another inventory count. So we're 12 months down the line and go, right, how many hamsters have we got now? How many fish have we got now? You'd count them up. You'd put a value against it. So here we've got a value of 2,500. And can you see I'm taking it out? Because have I sold those purchases? So that 2,500 is in there. So of that 14,000 or of that 770 plus 14,000, whatever your numbers are, of my opening and my purchases, I have looked to see what we've got left that we've not sold at the end of the year. So what we've not sold at the end of the year, and that is what I've not sold. So I'm going to take it out because it's not fair to match that cost against these sales because I've not sold them yet. Does that make sense? This is very high level, guys, very high level. But what I can then do is sum up my opening inventory plus my purchases. So plus take away my closing inventory to give me my cost of sales. So that will give me my cost of sales. I deduct that from my sales. So sales less cost of sales will give me something called gross profit. So you may have heard in business people saying, oh, I want the gross profit to be 20%. I want the gross profit to be 30%. We now know how people arrive at gross profit. It's where we take the sales less our core costs. Is that all right, guys? That doesn't include all expenses. That is including our trading expenses, our direct costs. That's what it's looking at there. So we then need to add on all the other expenses. Now here we've got rent and energy. Some of you mentioned earlier about rent. Rent can be direct, but it can also be an overhead. So for example, if you've got a factory that you rent out, that could be direct because it's purely to do with the factory. But if you've got a head office, you can't really say that's trade. That's like what we call an overhead. You can't directly attribute it to the making of chocolate buttons, but you need a head office where all the admin guys deal with the invoicing, etc., and HR and IT, loads of compliance. You know, you need loads of people nowadays to do business. Motor expenses, telephone, stationery, insurance. This list is endless. Stationery, insurance, training. Ooh, one thing that's not on there is like wages, but you could have wages in here as well. Wages. Is there any other costs that you can think of, guys? Stationery is my favourite. I love buying stationery. Insurance. Legal fees. Accountancy fees. And the more experience you get, guys, the more examples you can give. So you would then list all your expenses. So you'd list them, you would total them, and that would come off. So you would take your gross profit less expenses to give you your net profit. And where did I say the net profit would go? Where did we say the net profit would go? But they're exactly the same outcome, which is right. It will go to the statement of financial position. So absolutely, so it goes to the statement of financial position. But that's because it's the owners, isn't it? So it goes into the capital element. So I absolutely agree. It goes to the owner. How do we show that? By putting it into the balance sheet or statement of financial position. So it goes there. So that profit goes into the balance sheet. So the two statements are linked together.